Hi, my name's Tim Campbell, one of the board advisors at Humaniq, and we're here with Humaniq Faces, talking to interesting individuals who have made a real impact in their representative businesses. And our guest today is going to introduce himself.
Hi, my name is Johnny Fry. I'm CEO of a company called Team Blockchain. I've been involved in the asset management business for well over 20 years and here to talk to you, Mac, about some of the things that are going on in the blockchain industry.
Fantastic. Now, Johnny, you've had an amazing career. We've seen your CV and some of the things that you've been up to. But for me, just take us back. Where did you start with your early education?
Well, my early education was actually when I was about 13 or 14. My godfather was a director at Lloyds Bank.
Yep.
And I used to sort of work in his woods, cutting down trees. And I couldn't work out what he was doing in the dining room. And it turned out he was a day trader. And so he had a stack of contracts like this at the end of the month and appeared on Money Programme numerous times.
Yeah.
And he just got me involved in following markets, and I realised you can make more money out of sort of growing money than you can chopping down trees.
Well, I suppose but they're both very similar, aren't they? In terms of you have a product, you have a service, you have to do something, and then you have to make a return. For you, seeing him involved in that industry, what was it that excited you about day trading?
It wasn't so much the excitement of day trading. It was the correlation between what was going on, if you like, at a government level in terms of interest rates and why that would affect companies and individuals, whether it be cheaper to borrow money, more expensive, whether people had more money in their pocket. Yeah. But it very quickly turned from being an interest in. I remember the first share I bought was Dobson's, which made dime bars. Remember that? Yeah. And very quickly moved into looking at indices. Yep. So it was just at the start of sort of traded options. Yep. And I remember very clearly him explaining me and showing me how you could actually make money out of something called FTSE. FTSE. Yeah. I thought that was something you did under the table, but no, we're okay.
We're all right for now, yeah.
So it was interesting, not so much to pick shares, but actually I suppose what I now understood to be asset allocation. Yeah. So that's really what it sort of perked my interest.
And getting that level of understanding at 13 was really unique, actually. Were any of your peers also involved in it?
No, not really. It was like a game. It was almost like fancy football. And I couldn't work out how he could sort of make money literally by sitting at home deciding whether to buy or sell something. So it was. I've never been into gambling, believe it or not. I find the pain of losing money. Well, it's been proven it's 3 times worse than the actual satisfaction of making money. Yep. So it was interesting how you could, I call it baby steps, how you can make small sums of money over a period of time. And he taught me things like sort of, profit targets and stop losses and things like that, which when explained to you, they just make sense.
Cool. And you talk about what excites you then, the pain of losing, obviously we all understand that. Is it making money or being successful?
No, I suppose it's the intellectual challenge. And then, I then went on and went to university and I was sponsored by Wimpy, the builders, not the burgers, and had a bit of an insight to, the construction industry. But I'd always wanted to run my own business, do my own thing. So very, very early on, I decided to start managing money. It was just prior to the Financial Services Act in 1985. And just managing money for friends and family. Using, at the time, there were things called with profits funds and the beginning of unitised funds, which became unit trusts, which became UCITS, CCAVs, depending on where you are, and mutual funds. And it was the interest of actually giving people the ability to give exposure to things perhaps they wouldn't have otherwise normally touched.
It's kind of gone full circle because that's where you are now in terms of where you've been. For those who don't know about your CV, would you kind of give us a potted history and the different steps and where you are now with your business?
Yeah, sure. As I say, I started managing money. I thought I was, I couldn't work out how I could try and get ahead of the curve. In the sense of trying to get information, because people say, well, what's happening in the markets, what's going on here, what's happening. So I invested in a TV which had something called teletext, because teletext had a 15-minute time delay, whereas the FT was 24 hours. So that was a big technological breakthrough. I then went and joined a company that was a financial advisory business that had money that they wanted managing, and I took with it some money that I was managing. And then over a period of time, we sold the financial advisory business off, and that left us with just purely an asset management business. So we were managing money on behalf of private clients, pension funds, charities, and it was all unitised money, so it was typically within funds.
And what age are we talking about here now?
I was talking to my daughter about this. I was mid-20s, and I remember quite clearly the 87 crash. We'd been very, very nervous in the summer of 87, the way the stock market was going. And actually, I was actually long of puts. Again, traded options. So I lost a few £1,000s on that. Had it actually been a month later, they'd have made a few tens of thousands. So I think that's a really good lesson, that you can have the right trade, but if you've got the wrong time, it's not worth the row of beans.
Cool. Timing is everything. So where are you now? What are you doing now?
Well, I ran that business for over 20 years as CEO, and we reversed into an AIM company. We then took the company onto the main market, and we got up to over £1 billion under management. And then I left them a few years ago because I'd been on, if you like, the side of managing money for someone like yourself, and going to companies who wanted to raise money. And I was interested in, if you like, going on the other side. The trouble with money management, it's very intangible. It's just it's bits of paper, it's numbers. So I was quite interested to actually work on the other side and help companies, if you like, run the companies and be more involved and be a little bit more active.
And that's the bit that excites you, actually, getting your hands probably dirty, involved in stuff rather than sitting at a distance. Yeah,
I feel quite lucky because I've been in a variety of different roles along the route, and seen the challenges of raising money and running a business and growing a business. And it's really interesting. You talk to a CEO and say, if I gave you £1 million, what would you do with it? And most of them go, most companies, I always measure a company on, how are you going to give your investors their money back?
Return.
So what's the exit route? And again, most people don't have an exit route. They don't have a plan, which it's unsurprising, therefore, that they don't perhaps realise some of the goals and ambitions they're actually trying to meet.
And I suppose that's not always a negative thing if you want to run a lifestyle company or a business. That's so for you. But essentially, the companies you deal with are looking to have some return back to their shareholders.
Yeah, I think if it's your business, 100%, absolutely you can do what you like with it. But as soon as you actually introduce outside shareholders, they have an expectation. Most of the time, they're investing money because they actually want to make a return on the money. So I think you have to treat them with huge respect. And I suppose most of my life I've been in the regulated space, so I tend to look at businesses and business, particularly the current market when we're looking at what's going on in sort of the cryptocurrency field. It's very unregulated, and it reminds me a little bit of the.
Is that such a bad thing?
Yes and no. It reminds me of. I remember very clearly we had a lady come in to see us who had some money, and we made money for her over a couple of years, and then she was going to cash it in, and I said, "Do you mind me asking why?" So I'm going to become a Lloyd's name, and I said, "A what?" So I'm going to become a Lloyd's name because my £300,000 can work really hard, and she unfortunately lost the lot in 18 months. And then we had the 87 crash come along, and I can remember lots of people, they were just going out and buying shares like crazy. And a lot of that had been kick-started by the government with the IPOs. Tell them about SID and all the rest of it. And then suddenly the whole liquidity, i.e. the ability to buy and sell, just fell out of the marketplace. And indeed now we've still got the Japanese, the Nikkei 225. It still hasn't reached the high that it was back then.
I suppose the interesting thing now, though, with the cryptocurrency and blockchain, which it's allowing almost a democratization of access to investing, where many of the companies that you would have dealt with, be that on AIM or on the bigger list, unless you're a sophisticated investor, you'd never even hear about it.
Yeah, and I think, going back to your question, is regulation a good or a bad thing? I think that it's not my opinion. If you look at the percentage of equity shares that are held by private clients, it's an all-time low, right across most markets in the world. And what's happened? You've had more and more institutions and more financial firepower being pushed into a smaller and smaller set of people. And you've seen over the last 20, 30 years in particular, the rise of something called an index fund, a fund that will simply track the index of the CAC 40, the Nikkei 225, the S&P 500, the FTSE 100, whatever it may well be. And then around that you have these active fund managers who 2/3 of them don't beat the index. Their annual management fees can be 10 times what an index fund is. But these fund managers, they have huge amount of clout. And if you don't do as they want, or you don't perform as they want or pay a dividend when they want, then they're impacting on the management.
Yep.
And the management spend, in America it's crazy, they're obsessed with quarterly earnings.
Yep.
And they have to hit their quarterly earnings in order to keep the share price going. And they're up to their ears in options and share incentives, aligning their interest with investors. But what's happened, we've had this sort of manic movement that you're forced to do things, where if you didn't have that pressure, then you can make other more longer-term decisions. And I think the East we've got a lot to learn from the way they operate businesses in the East, and it's very interesting.
It's very true. I think Paul Pullman speaks very well at Unilever about changing the way that they are managing their business, because that impetus to get things done in the short term was changing their business process. And I think if you want to back a company, you should let the management, if you trust the management, get on with actually running the business, rather than just flirting with those who may have an inordinate amount of influence over where the business direction is going.
Yeah, and I think a good example of that has been what we've seen historically with private equity and venture capital, where they've come in and they've actually taken companies off the market, taken them away from the glare of regulation and quarterly earnings reports, and then they've invested money in them. They haven't had to necessarily how or why, because that's what the fund's there to do. And then they've gone and refloated the company at a later stage. The trouble is with a lot of the private equity and venture capital investors is that they've ended up loading these companies up with a lot of debt. And that's great when the company's growing well, but if the company isn't, then the debt ends up eating yourself if you're not careful.
Correct. So I suppose we talked about VCs, we've talked about the potential of people investing in markets, angel investors. How is that being impacted by the whole world of blockchain and cryptocurrencies? What's that? Is it negatively impacting the world of VCs?
Yes, I think these things called initial coin offerings, and it's always interesting because when you're in the market and the buzz, you say, "Oh yeah, an ICO." Well, if you want to go Google ICO, do you know what you'll come up with?
No, what will come up?
The Information Commissioner's Office. So you have to.
It's quite interesting. That
so
is the first link.
You've got to be careful, to make sure your audience knows what you're talking about. But yes, I think the reason that VCs are being impacted is that you're absolutely right. The current market is helping to effectively create what I refer to as a digital pension.
Yeah.
So you've got. If we look at the ICO market at the moment, it's currently capitalised around about 90 billion. There are approximately 14 million people that have invested in it.
Yep.
So as a market, it's believe it or not, 90 billion isn't a lot of money in the world terms, but nevertheless 14 million people involved in something which...
It's a lot of wallets.
It's a lot of wallets. If you take out 20 billion, just as a number, because some of these people invest in cryptocurrencies for a long time, you're left with 70 million.
Yeah.
Divide that by 14, it's an average investor of around about $5,000. So what you're seeing a lot of people in their mid-20s that'll have £500, £300, maybe £1,000 in a variety of different sort of startups almost. Businesses that would historically maybe 30 years ago, you'd have gone and seen your local bank manager. Yep. He'd have looked, you say, Tim, I really like the idea. We really think it's a good idea to invent something called a tie. Because one day you'll wear one as well. And, we'll make the tie company.
Yep.
And he would have lent money on the back of who you were and maybe, your family and maybe, your plan.
Yep.
The bank manager, the lender like that has gone. It's completely gone. So what really the only places now left are angel investors. You've seen the start of Kickstarts and things like that.
Yep.
But what I find interesting, sometimes if you look back in history, and if you look back at, I think you can learn from what's happened in the past in the financial space. And the two examples I'd like to give you that is one, a very, very old example, it's the price of corn.
Okay.
So if you actually look at corn prices, in the British Library, we have them going back to Egyptian times. And what they do is basically they go up and they go down.
Yep.
And it's years of feast and famine.
Yep.
Okay, and it's very, very simply, it may be weather, but obviously if the price is really high, you're going to get lots and lots of farmers planting corn and perhaps not rice, so therefore the price comes down. They then go on to maybe breeding cows, and so it goes like that. And if you look at markets, and if you look at prices, majority of them will follow this sort of cyclical sort of movement in prices. So I think when you're investing in a market, try and work out, try and have a feel, are we up here? And is the market going to do this? Or are we here and here's an opportunity coming up?
But that's really interesting in terms of you look at, but when you look at some of the meteoric rise of some of the companies that are involved around blockchain, these aren't little ups and downs. Some of these are stratospheric in terms of, is that sustainable? Have we changed the planning or the bell curve that is around where businesses succeed and fail now?
No, and that's why I think if you go back to history, in the sense that, yes, you've seen some companies do phenomenally well.
Yep.
But you are going to see, unfortunately, you will see the vast majority of the coins, the tokens that are being issued, they won't work.
Yep.
And it's not because that's unique to them.
Yep.
It's the same in history throughout. You know, if you look at the statistics certainly in America, according to the labour statistics, it's something in excess of 50% are busted in 5 years.
Yep.
The same in the UK. So, but what I find interesting about the tokens and the coins that are being issued at the moment, again, if you go back in time, you know, you originally had sole traders. You know, I was a basket weeder, you were a fisherman, someone else was a herder, and then you had the sort of feudal system of the lords and the barons, where basically you did as you were told, and they were possibly today's oligarchs. No one could really touch them. Had complete control. And then we sort of run through to sort of 1620, when you had the East India Dutch Company, and that was the first joint stock company. And the reason I mention that is a lot of people are likening blockchain to having potentially the same impact as a joint stock company. And that's quite a statement to make. But nevertheless,
you don't buy it though.
No, I don't, because I don't believe the technology of blockchain is sufficiently robust enough to have the scale that it needs for all the applications.
Yet or ever?
Yet.
Okay.
Yet. But the reason I'm just talking about this is if you like, looking back at history, because now what we've seen, you know, companies now, and most people are familiar investing in companies and bits and pieces. But in between that time period, we had something called a cooperative, where people actually got together and they pooled their resources, and maybe someone picked the grapes and someone else would crush them, and someone actually grew the fruit and someone else sold them. And really what ICOs are, many of them are actually a cooperative. They're actually raising money off many people. And those people believe in that technology, that company, and it's going to be run on a consensus basis for the community of investors. Now that's one style of ICO. So it's just quite interesting when you see we've almost done a full sort of circle around in terms of nothing. And I suppose really what I'm saying is nothing is new. And yes, you look at, you know, let's look at Ethereum. Ethereum is not even 3 years old. It was launched at around about 30 cents a share. Today's price is around about $200. So I think that's the other interesting thing. You know, Bitcoin the same. Bitcoin was issued at, you know, cents. You know, certainly less than $1, and today's price is well over $2,000. So some people are sitting on a huge amount of money. Now, it's always prudent to have diversification. So there are a number of people out there who have got this money. They've got to be careful where they repatriate it. How do they get it out? So I think what you're seeing effectively recycling of the existing funds going into these various different tokens and coins coming out.
What does the future look like for the world of cryptocurrencies and Bitcoin, in your opinion?
I think the future for cryptocurrencies looks really, really promising. And the reason for that is that we're beginning to see the public re-engaging with companies. They are re-engaging, saying, okay, I know I could lose £1,000 or £500, but I'll put it into this company because I believe it. But what I think is interesting is you're also seeing different types of participation. And what I mean by that is you've got the cooperative participation, whereby effectively the tokens are the equity of the business. So if the business does really well, the tokens do really well, and they can make money. And I think that's where most people think of tokens. But there's two other uses of tokens. The second one is the whole loyalty program. So I'm going to buy tokens because you've got a product or a service that I want access to, and the only way I can get access to it is through your token. So I think that's a really interesting way for companies to actually be able to promote themselves, to raise non-equity, non-dilutive capital that hasn't got a penalty or hasn't got some sort of termination clause or hasn't got you know, an interest carry on it in a very effective, very cheap way. And it's because we've already talked about the holdings, you're typically going to pick up people having sort of, you know, $4,000 or $5,000 at a time. So it's not going to be concentrated in the power of one or two institutional fund managers who suddenly say, oh, I want to sell my holding, and suddenly the share price goes crazy down. So that's the two. You've got the cooperative coin, and you've then got the loyalty, the token coin. And I think there's a real possibility you'll see some big companies come out with ICOs and use those tokens within their community. I wouldn't be at all surprised if you saw someone like Amazon, for example, have the Amazon coin. because then they've captured maybe a few more £1 billion, and you can only spell it on Amazon products. And if you've got an Amazon token, then there's a small discount because they're controlling it. The third coin, which I think is interesting, and I've only seen a couple of examples, but there's a company recently that's just raised 3.7 million off 1,500 investors. So again, lots and lots of small investors. And they're actually developing a synthetic commodity called Zinchromium, and it's the ZR coin. And what I find interesting about that is that they're saying the price of the commodity is £2.80, let's say. We'll issue the coins at £1.40. Oh, sorry, it's all in dollars. So
the equivalent.
And if you give me the money, we'll build the plant, and then as we start producing the commodity, we'll buy it back off you. So for me, that reminds me of, you'll be familiar with zero dividend preference shares.
Correct.
It's almost like an inverse sort of form of finance, in the sense of sort of inverse cash flow, because basically I'll give you the money, if you do the job, then you can buy it back off me.
But I suppose there's the inherent risk in there around, will those companies be around long enough to actually realise that vision, and do they have enough capability or technical ability to get to that particular point? Because you've talked very clearly about the lack of skills around developers clearly in the industry, and there's a lot of promises being made by these companies, and can they actually ever realise? But I suppose that's where the risk comes in.
That's where the risk comes in.
But these are not sophisticated investors though.
They're not sophisticated investors, but they're not risking their entire life savings.
Good point.
And they typically have got good diversification. If you again go back and look at the amount of money they're investing in these different assets, they're not sophisticated investors. They're not looking at the volatility of the returns, because to be honest, most of the coins have sort of they've just gone straight up, so they have no volatility. But I think what you are seeing, and I think this is really exciting, you're now seeing an alternative asset class.
Correct.
You're seeing an asset class that isn't correlated. It goes up like that when perhaps the market goes down. And if you've got an uncorrelated asset class, longer term that'll help the diversification. So hopefully, if they've got money in traditional forms of investments, because now they've got workplace pensions in the UK, and that'll be going into traditional equities and bonds. Which arguably, I think that's probably one of the biggest mis-selling scandals we're about to see. Anyone putting money into fixed interest rates at this current time of the market, and there are billions. We've already seen another, by the way, mis-selling scandal which no one's really talked about, and that's the asset allocation to America. In the UK, we have 5% asset allocation to the world's biggest stock market, and which has performed really, really well. Average pension fund 5%, but no one talks about things like that.
Well, they might still have to. I suppose the future doesn't look very bright for lots of those things, but what's your future looking like? What's the big plan for you?
Well, I'm very excited about the ability to enable, and it's typically young people, it's typically people under 30, to be able to raise some money to help them develop and, if you like, realise their dream. I talk to my kids' friends, and I sort of look at what they're trying to do and what they try. A lot of them want to do their own thing. They don't want to work in a big company. And I think in the past, your parents just said, you get a job at the bank, you go and work at the shop, you go and train to be an accountant or a solicitor or whatever it may be. That's it. The entrepreneurial side really wasn't encouraged, certainly in the UK. Whereas I think now people have been inspired by, .com, entrepreneurs.
The Zuckerbergs of the world.
Yeah, the Zuckerbergs and the Gates of this world who have built businesses, global businesses. And I think the ability, and I don't believe it's just about money. I think they actually have a passion, they have an idea, and they want to try and realise it. And I think that ICOs, you can raise £500,000, £1 million on an ICO, and that's a lot of money for a small startup business. You compare that to what it would cost if you go down the non-traditional route. It's going to cost you £500,000 in accountants and lawyers and brokers' fees before they've done anything. So that's why the stock market is becoming increasingly irrelevant for the smaller companies. And that's where I think the venture capital industry is going to come under increasing pressure, because companies won't need them as much for their money. So the venture capital companies are going to have to start thinking, what else do they offer? Now, a lot of them have some very, very clever, some very, very experienced people within them. And actually, I think that knowledge and that perspective can help businesses. And I think they can actually end up being mentors and guiding these businesses through their growth phase.
Consultants,
as opposed to just, here's some money, and if you don't do as you said
here's
you're
the
going to do,
milestones, we'll have it back.
We'll have it back, because that's what happens at the moment.
You kind of described what the millennials are talking about, making a difference in the future. You kind of sound like you're describing yourself. So you as a millennial, in terms of mindset, what's your vision for the future? What's your vision around the world? Just generic in terms of telling our audience.
I think that there's a huge amount of disillusionment with millennials.
Yeah.
But also I think in sort of old boys and girls of sort of my age, so the wrong side of 50. I think that I suppose I look at when I look at sort of managing money, when I look at it from a financial point of view, I struggle to understand the value that's currently in. Well, there's no value in bonds, in my opinion. Yeah. Equity markets are fairly, if not overly priced. Property. How does anyone in London, in New York, in San Francisco, in Paris, in Berlin, how do they afford to get on the property ladder? Yeah. And it, it's sort of. I feel for the kids, particularly in London. You're paying sort of £2,000 a month for a flat. Well, that's most of the money you're earning. And certainly if you end up going to university and you end up with £20,000-30,000 debt, and then you've got to find another £20,000-30,000 equity for a deposit on a house. Now that's going to have an impact. Yeah. That is going to have an impact. And I think that people have lost confidence with governments. And I think they've lost confidence with companies. And it's interesting, if you see the rise of digital marketing or advertising now far more into digital marketing, and the rise of vloggers. Vloggers, yeah. Bloggers. Yes, sounds like the Teletubbies. but someone you'd never met, but you feel that you know them.
Connection to them.
And they say, well, we think this particular brand is good, or
and
we
off
think
they
that.
go.
And off they go. And people have some sort of identity. I was absolutely amazed reading some figures earlier in the week about Facebook. If you click on a Facebook ad, there's a 24% chance you'll then buy.
Correct. It's unbelievable, the power of it.
It is, but I think because people have lost, they've certainly in the West seemed to have lost a sense of community. We don't look after a family typically. We don't look after granny and granddad typically. Whereas going back, I think to be fair, in the East, I think they've still got that, and they've got the sense of community. So I think that's one thing which, in a funny way, ICOs are tackling, because they're creating a sense of ownership and community and collectiveness that it's in our benefit that it'll work. So I think that's quite an interesting social impact on the capital markets.
Fantastic. Johnny, you've been an absolute star. Thank you so much for your time. Wish you the best of luck with your career, and thank you for joining us at Humaniq Impact.
No, not at all. Thanks.